I'm Chris Cassidy. This is the Nusun Network. We are in Marbella with Mike from FCG, and we're going to be talking about finance. So Mike, welcome on board, and tell me about you and the audience about you and what it is you do.
So my name's Mike Brady. I work for FCG Mortgage Consultants. At the moment, we're very busy providing advice to expats who want to buy property on the Costa del Sol, and they need some kind of mortgage loan in order to complete the purchase.
Right, okay. And whereabouts are you? It's not a Spanish accent I'm hearing.
No. I was born in the south of England.
Okay.
I lived in Peru for 8 years.
Okay.
And I've lived in Spain for 10 years.
For 10 years?
For 10 years.
And you live, you don't live in Marbella? You live...
I don't live in Marbella. I live just to the east of Malaga in a town called Rincon de la Victoria.
Wow, okay.
So
about an hour, maybe? About an hour's drive?
It's about an hour from here.
Yeah.
And it's a very different kind of vibe to Marbella. So Marbella feels kind of American, maybe a bit Russian as well.
Yeah.
Rincon de la Victoria is very Spanish. So
Very
it's
Spanish.
full of tapas bars. Everyone has a siesta in the afternoon. Everyone's out for afternoon drinks when the people in Marbella are working. Everyone's
working
out
hard.
everyone's out for afternoon drinks in Rincon de la Victoria.
So you're doing the international mortgages, because that's, for me, we're a real estate company. We get a lot of people abroad wanting to buy here in the Costa del Sol, and they want to get a mortgage. So just in terms of, you say you're busy with that thing as well, which is fantastic. That's why we've got you on. But can you just tell us about the pros? Because some people, they come to me and they're like, Chris, I don't know, what is the process? Where do I start? Can you explain a little bit more about that and where they get started? And does it change depending on the country they're from?
The process for applying for a mortgage, if you're from overseas, it's a fairly complex process to go through. There's a lot of paperwork involved, which is why it's quite important to hire an advisor or a broker to help you through it.
I agree.
Spanish banks have to follow Spanish legislation on mortgages, which is the law on mortgage contracts and loans.
Okay.
So all mortgage brokers have to be certified according to this law. And the law requires them to collect a very comprehensive series of documents on all of the potential clients. So they have to perform an exhaustive credit check. And financial checks on all of their potential clients before they'll consider granting a mortgage. All of this process takes quite a lot of time as well. So kind of the worst thing you can do if you're buying a property in Spain and you need a mortgage loan here is to leave it all to the last minute. So it's a very when
I've experienced that.
when a Spanish person buys a house here, for example, they'll fall in love with a property, and they'll often be able to draw on loans from parents or other family members, and they'll kind of cobble together the finance in some way or another. But someone coming from overseas to looking for a mortgage loan, someone coming overseas to buy a property, they really need to plan ahead before they start looking for a property. So we always say to them, finance first. We're quite happy to sit down with them and go through their paperwork and work out exactly how much of a loan they could take out.
So they know where they stand when they're looking for a property.
They know this. They know where they stand, exactly that. So the idea is to get them some kind of pre-approval, some kind of a certificate from a bank that says this bank is lending Mr. X a certain amount of money. And then they can use that as almost kind of a good negotiating position when they're going to buy the property. So they've got the financing secured. They know what sort of price range of properties they can look at.
Yeah, but they feel. I suppose it takes the stress away, because you know where you stand. You know the prices you can negotiate to, because that's what you can afford as well. And you know you're going to get through that process a little bit easier. Also, and just in terms of that, so it's obviously come to a broker, prepare your documentation. I'm assuming you need to show your finances and where the money's coming from. Is there any? Can you go into a bit more about that process? What people should have prepared?
It's a very bespoke kind of process.
Okay.
So the documentation varies according to your individual situation. The simplest possible situation is if you're a resident in one of the EU countries. And you've got a salaried job.
Okay.
So you work for a company, you earn a good salary, and you want to buy a second home in Spain, like a holiday home. If you're in that situation, the sort of things that we would ask for is passport and an NIE number, which is the Spanish official tax identification number.
Yeah.
The NIE can be linked to residency or not. So you can, everyone needs an NIE number if they're going to sign any contracts in Spain.
Okay.
It can be also a residency number if you're going to live here more than, I think it's 6 months a year. Then we're asking for things like bank statements. We ask for 6 months worth of bank statements and 3 years worth of tax returns.
Okay.
A credit check from a company such as Experian. They can be sourced for free online. It takes a couple of days to turn up to your email.
What about, I mean, a lot of the customers I get, you know, they might be from the UK, for example, or they might be from Ireland, right, in Europe, and they're normally, they might be looking for a villa, right? So normally they're not like standard employees. They're normally business owners, entrepreneurs, and things like that. What process would they need to follow? Because they might not have they've not got a salaried job per se. They might pay themselves a salary, but sometimes they might pay themselves with shared dividends and things like that. So
this is actually a very common situation that we come across. Let's say that they're a contractor, or they run their own business in the UK, or they run property investments in the UK through their own business.
yeah,
That's a very common situation. I'm sure you know that in that situation, people like to pay themselves as little as possible.
yeah, exactly.
It's a logical step. So they're paying themselves the minimum possible salary through their company, and then taking things like directors' loans,
Exactly.
dividends, things like that. So when a Spanish bank sits down and looks at your finances, they're looking at your last 3 years of history.
Yeah,
So they also take into account debt to income ratio.
right. Okay.
So the amount that a Spanish bank is willing to lend you can be 35 to 40% of your available monthly income.
Okay.
So let's say you earn £10,000 a month. Take away 2,000 for your mortgage and car payments that you're making in the UK.
Yeah.
So you can afford to pay up to 40% of the 8,000 that's left over as a mortgage payment in Spain. It's a pretty standard calculation here, but if you're just taking £2,000 a month out of your company because you've got income coming from elsewhere, it's kind of difficult to prove to a Spanish bank that you've got enough to make the mortgage payment.
Okay.
So our advice to people who are trying to plan ahead is to pay yourself more.
Right.
Take more out of your company. Try to create some kind of a paper trail that shows that you've got a reasonable income per month. We know that involves paying extra taxes, for example. So it's a very difficult balance to strike.
Maybe do that for what, 6 months, so you can show your bank statements. Potentially.
If you can show your bank statements and you've got pay slips or some other kind of dividend statements showing this extra income coming in, it's very useful.
Yeah.
Spanish banks, they're happy to look at things like rental income coming from other properties.
Okay.
So they'll look at a property portfolio in general,
Right.
and maybe take into account 60 or 70% of that income that comes in.
Right.
So they err on the side of being very conservative in this sense.
Right. Okay. And just in terms of the banks, I mean, how many banks in Spain are lending to international buyers? Is there quite a lot, or is there only a certain amount that?
On paper, all of them are.
Right.
But then you get different levels of interest among the banks as to how willing they are to lend to people from overseas.
Okay.
We've got 2 or 3 banks that we always go to who we know are very willing to lend to buyers coming from overseas. And they've got streamlined processes that almost help out buyers from overseas as well. So they're willing to look at documents in their original language, providing that
That's a big thing.
Yeah, providing that the language is one of the main European ones, and mostly the ones that are written in Roman alphabet.
Okay.
So we're talking German, French, Belgium, Norwegian.
English.
Yeah. Well, English is one of the big ones. We've had clients from further afield, so in places like Kazakhstan, when all of the documents have to be translated, notarized, and have an apostille certificate on them. So it's a bit more of an involved process for people who come from further afield.
Right.
These banks they're kind of our go-to banks. They're the ones that we know offer really competitive interest rates. and that they're willing to be kind of flexible with the sort of paperwork that we present them with. So they're
Right.
willing to look at paperwork in different languages. They also have a knowledge of how things work in other countries. So they know what a P60 is in the UK.
Yeah.
So they know that people working in the UK don't necessarily have full tax returns. The P60 is just their income statement for the year.
Yeah.
So we don't have to explain this to them every time that we present a client to them.
It's a good point because you've just said that there, because not everyone does in the UK. You don't, if you're an employee, you don't do your tax returns.
Yeah,
It's kind of done for you. You just get a P60 at the end of the year, and that's you. You're good to go. But it's good that they see that at the bank, because I have heard some different views on it. But it's good that you found the banks that can really work with them. And just in terms of the sort of interest rates that we're seeing, because I've seen a few fluctuations in it, but are you seeing is there any differences in interest rates depending on where you're from or the country you're from, or is it quite standard? I'm just trying to understand the variations.
Okay, well, if you're a Spanish resident,
Yes.
regardless of whether you're Spanish or not, then you can often get slightly better conditions
Okay,
on mortgage loans.
right.
If you're coming from overseas, if you're within the EU Euro area, you can often get very similar conditions as Spaniards.
Okay.
At the moment, over the last few months, we've been seeing loans varying from 3.5 to 3.8%. We can get fixed, mixed, or variable terms from banks. So we can get, say, a 3.5% mortgage which is a fixed rate over 20 years. The big difference between people coming from overseas and Spanish residencies is the loan to value ratio that we can get on the property.
Right.
So Spaniards can get a standard as they can get 80% loan to value.
80. Okay.
Sometimes we can push it up to 85%. It depends on the property, where it is, if it's in an attractive location, if the price is good.
Then you get more.
Yeah, you can maybe get a little bit more. People coming from elsewhere in the Eurozone and the UK and the US, we can normally get 70% loan to value for them.
Okay.
Clients coming from places like the United Arab Emirates, it goes down to 60% because the bank has to take on some kind of exchange rate risk. Interest rates are they don't vary all that much. They're very competitive in Spain at the moment compared to other countries.
It's compared to the UK, especially.
Compared to the UK, we're getting a lot of interest from the US at the moment, because I'm aware that interest rates in the US are maybe 4.8, 4.9%.
Yep.
On mortgage loans.
Yeah.
So someone coming from the US can get a whole percentage point difference in the loan. So it's very financially efficient for them to come here and get a mortgage.
Yeah.
And we're seeing an awful lot of interest from buyers in the States.
Especially because we've got the direct flight from New York to Malaga now. So
yeah, it's very handy.
it's opened up a lot of new opportunities.
But we don't just work with clients who are looking to buy in the Malaga area, because the contacts that we've got in the banking system in Spain, they work nationwide.
Also the whole of Spain.
The whole of Spain, including the Canary Islands and the Balearic Islands.
Okay.
So if you're interested in mortgages for anywhere in Spain, then we can help you out.
Do that as well.
My partner, who I work with in FCG, is a gentleman called Alberto Bertazzi.
Okay.
He's been working in the Spanish banking and mortgage sector for the last 15 years.
Wow.
So he's had the opportunity to build up a lot of personal contacts in different banks,
Yeah.
particularly locally in the Malaga area, also in Granada.
Right. So he's got that. He's got that established connections.
So he's got the connections, and the people he built up connections with 15 years ago are now in managerial positions in banks in Malaga. Any clients that we've got, we can kind of give them the red carpet treatment. We walk straight into the director's office rather than them having to go to the counter first of all and wait in line. Which it's worth a lot of money to client. Time's money, so we can save a lot of time.
Of course.
If you're a person. If you just turn up in Spain and walk into a random bank branch, particularly if you're from overseas and you don't know much Spanish, you can often be stonewalled.
So just that alone is worth its weight in gold. And it's so just, I mean, on this and on the mortgage element, I mean, you mentioned the rates went to about, is it 3.5? Is that what you've said?
Yes.
And is that's probably been since what, January 25?
That's from January 25. And we're looking at the possibility of rates lowering through the year, because there's a general downward trend in the European Central Bank interest rates.
Okay.
So if you're thinking of buying maybe towards the end of the year, you could maybe expect an even better deal than
Even
that.
better deal.
Having said the 3.5 to 4% is kind of a headline rate that the banks offer. As with everything in Spain, it's a bit of a grey area, because when you take out a mortgage in Spain, the bank will offer all kinds of associated insurance and bank account products. And for each product that you take out with the bank, they'll offer a discount on the mortgage rate.
Okay.
So one of the biggest one is just opening and maintaining a current account. You get, let's say, a mortgage loan of 3.5%. If you take out a current account with the bank, they'll give you a 0.6% discount on the APR.
Okay. So there's little things there that can add.
Well, there's little things. Then everyone's got to have home insurance if they're buying a property with a mortgage loan. The bank will provide you with the home insurance, and they'll give you an extra bit of discount on the APR if you take out the insurance.
And you'll have access to those types of products anyway. So if you're helping a client, you'll be able to advise them potentially of, if you go with this, you'll get this mortgage rate, but actually you're going to get these little things as well. You'll be able to talk them through that.
Sure, absolutely. It's all part of the service that we offer. So because when you get a mortgage quote from a Spanish bank, it's a 6-page document which is very dense and facts and figures and small print. So it's very important at that stage to sit down with the client and run through everything that the bank is actually offering them.
Yeah.
Make sure they understand what they're getting from the bank before they move forward with the process.
Exactly. And just on this, right? So I think you mentioned 20 years, a 20 years term on a mortgage. Yes. Is that standard? Can you get more than that if you're not from Spain? Can you maybe get a 30-year term?
If you're non-resident in Spain and you want a fixed rate mortgage, the standard terms are 20 years. 20 years. If you want to go for a variable rate mortgage, which is based on the Euribor interest rate plus a margin. Okay. So I think the Euribor last month was 2.4%. So April, the end of March, going to April, that happened then, yeah. So then the Euribor is 2.4%. The bank will add an extra 0.8 or 1% on top of the Euribor. Okay. So as the Euribor goes up and down, you pay a variable amount per month as a mortgage repayment. And what are you getting more of? Variable requests or fixed requests? The people who come to us are very interested in the fixed rate requests. Just so they know. They know exactly what they're going to be paying on a monthly basis. It doesn't change through the life of the mortgage. Okay. So it's very attractive to foreign buyers because and that's a 20-year term. Over 20 years, yes. I'm just thinking about some of the clients that I've had from the UK. They'll ask me questions about, can you get an interest-only mortgage? Or has it got to be repayment or vice versa? Can you talk a bit about that and what type of mortgage it is? Sure. Interest-only mortgages are very rare in Spain. Okay. So they're almost unknown. If you walk into a Spanish bank and ask for an interest-only mortgage, they'll look at you like you're from outer space. Spanish mortgages are very traditional. They'll go for the capital repayment plus interests every month. So it's a matter of working out whether you want a fixed rate repayment or a variable rate repayment. There are some mixed products as well where you get a fixed rate for the first 3 years and then variable thereafter. You may be able to find it in a private banking context if you've got a very desirable property, if it's kind of one of the sort of properties that you work with, so a multi-million euro villa that's in a prime location. That will be something to negotiate very much on an individual basis, and it's not general Spanish banking practice. Of course. And what about for some people, it might be too difficult for them to get a mortgage here? Is there any other alternative routes? I'm talking about people not in Spain, international buyers. Is there any other routes they could do to maybe get that finance? We have contacts with private equity companies as well. Okay. They don't offer the sort of interest rates that banks offer, and they don't offer the kind of terms that banks would be looking at either. So private equity would be approximately between 12 and 15% interest per year. Right, okay. And then there are certain other conditions that the customer would have to meet, such as putting the property in a limited company rather than holding it in their own name. Okay. But it can work out for some clients, particularly if they're looking to flip the property. So it's more investment type? It's an investment type property. So they get the loan over, it's almost a bridging loan kind of thing. So they get the loan over a shorter period, buy the property, refurbish it and sell it on. And they can pay that back. And that's something that you work with as well? We work with private equity companies that can provide that kind of financing, yes. And actually you mentioned equity. I mean, there is people in
You know, there is people who've maybe got a house there, they've already own a house, they've maybe got no debt on that property. There's some equity in that property. Is there anything they can do there to maybe pull some of that money out?
This is a question that we get all the time from clients of ours. It depends on the age of the owners. In the UK, I know that it's very common to be able to remortgage your property or get a fresh mortgage on a property, so you can use the cash to do pretty much whatever you like with. Here, it's very difficult to do that. So if you're looking for a remortgage, it'll only be granted under a very specific set of circumstances. So if you're looking to refurbish the property, they'll take the invoices from the refurbishment company and give you another mortgage loan based on that.
Be evidence-based.
Yeah, it's evidence-based. Or if you're looking to purchase another property, then you can take out a mortgage on the first one and use the money as a deposit or as a full payment for the second property. So these are the only two ways that you can get equity out of a property by remortgaging it in Spain. It's very limited.
But you can remortgage a property. What I mean, if you've got a property abroad, in the UK, Ireland, wherever, it's possible for you to put a mortgage on that property if there's equity in it, pull that out, and then you can buy a house with that in Spain, potentially.
You mean if you have a property in the UK?
For example, yeah.
Sure, you can do, if you've got some way of getting equity out of a property in the UK, you can use the equity to buy a house, but to buy a house on the Costa, absolutely.
And then you're just paying an increased mortgage payment potentially.
Yeah. When clients talk to me about this, they're often in that situation and they're looking to get equity out of their property in Spain somehow, but they also have properties in the UK.
Yeah.
And they'll always go down the route of going for a remortgage in the UK because it's a lot easier to get than here.
They've already got the mortgage, right? Some of them might already have a mortgage, and obviously the property prices have shot up, and they've still got they've got a good chunk they can pull out of it. So it's easier to have a conversation with that bank, I suppose, because you've been paying them every month.
Exactly.
Everything's been fine. Okay, that's a good option for people.
The other option we've got here for getting equity out of houses is there's an option known as a reverse mortgage, and there's also BareOwnership options. I don't know if you've come across these before.
I haven't, but please tell us.
We're kind of excited about these products because they're kind of new on the Spanish market.
A reverse mortgage.
Reverse mortgage.
Right.
These are products designed for people who are generally over 65 years of age.
Right, okay.
So a reverse mortgage it kind of does what it says on the tin. Instead of you paying the bank a monthly installment, the bank pays you a monthly installment.
Right.
So the bank is increasing the amount of mortgage that you owe to them.
Okay.
Over the space of maybe 20 years or 25 years. It's basically the expected your expected lifetime, your life expectancy. So they'll give you a monthly stipend when you sadly die at the end of this. Your descendants are then responsible for paying the amount of mortgage that is accumulated.
Okay.
Or they can decide to sell the property and keep the difference.
Yeah, which would probably be the wiser choice, unless they want to live in it.
Well, it depends on the individual situation.
Yeah, it depends on the property value and everything else, I suppose.
Indeed, but it can be a very useful option for someone who's retired and they want a little extra bit of income to live on here. We also have access to agreements that are known as BareOwnership.
Okay.
This is where a company comes in and purchases your property from you for a lump sum. The lump sum can be anything between 40 and 70% of the value of the property. And they give you the usage rights of the property for life. So for as long as you need to use it, the property is yours to all intents and purposes. Under some of the agreements, you can even rent the property out and use the income from it for whatever you want. So you're retired, you fancy a lump sum for either refurbishing the property or taking a holiday or for whatever other purpose you want. You come to the end of your life, the company comes in and the property belongs to them.
Belongs to them.
But you've had the benefit of the lump sum payment and the ability to live in the house for as long as you need it.
Yeah, and I think that's an important thing, especially, it might well be that their kids don't need the money. Yeah. Their kids have got their own source of income and everything else, so it's not that important that you hand the house over.
The kids have got their own money and they're not really interested in the property in Spain anymore.
Exactly.
You get a lump sum out of it, which you can enjoy however you like, and you can still carry on living in your place in the sun kind of until the end of your days.
So that's called a bare ownership.
It's bare ownership, and there's various different types of bare ownership agreements. There's some that are just lump sum. There's some that are lump sum plus monthly installments, monthly payments, and there's another type that's a lump sum plus a rent that you pay to the company, but you get a much larger lump sum at the start.
Okay.
So it all depends on, again, it's a very individual circumstance. So we need to get individual quotes for anyone interested in this kind of arrangement.
In which month did you, or when did this come in? Was it in 24 or 25? When did this new thing come in? That's the first I've heard of it.
This is a very good question. I don't know.
You don't know, but you've got access to this.
We've got access. It's at least over 2024.
Wow, so it's relatively new then, right?
It's a relatively new product. We've got a lot of people interested in this product at the moment. The expat population, particularly on the Costa del Sol, is aging, and they're looking to supplement their pensions maybe from the UK in some way, and it's a good option for them. Mortgages can be a very paperwork intensive process. Bare ownership is very paperwork light. So you don't need to come up with all kinds of credit reports and bank statements and tax returns. It's basically just a sale of your property and another agreement with the company that bought it that lets you live in it for life.
Here's a question, right?
Okay.
This is probably my investor head on me. If you were to get bare ownership of this, and you said you could potentially rent that out as well, if you were to get a lump sum, could you buy another property with it?
You can do whatever you like with it.
So you could still live in that, or so you would be able to rent that out, and you could buy that, or could you, if you were to get a lump sum, could you live in it, and so you could remain in the property as well if you wanted to, I think.
Yeah.
But you could buy another property with that and rent it out.
Absolutely.
Also, so then you're getting a bit of an income anyway, and you've got another property there.
There's a lot of different things there's a lot of different things that you can do with it. It's a very useful product.
It's interesting. And just on age, right? You mentioned the age, and I just want to go back again. You don't live in Spain. You're someone abroad, and you want to get a mortgage here for, let's say, 20 years, for example, on a fixed term. Is there an age cut-off?
The age cut-off is 75 years.
Right.
So 75 years old.
So if you come in at 74, want to get a 20-year mortgage?
You'd need to go into it with maybe your children or some other guarantor.
So you need a guarantor?
Yes.
And what age do you need a guarantor from, would you say? If you're retired? Is there an age where the banks would normally still want that?
We've recently been working with people who are in their 60s.
Okay.
And if you're in your 60s, you've got 10, 12 years, well, depending on your age, you've got a reasonable amount of time before the age of 75. So as long as you can prove income, you've got pension, you've got dividend investment, normally the bank doesn't have a problem giving you a mortgage for that kind of term. Okay. Again, it's a very individual situation. So in some cases, they'd ask for the signature of a guarantor as well.
Interesting. So that's good to know, because I was asked the question recently. And I thought, no, I've had loads of clients in their 60s buying. It's not been a problem. But it's good to ask you that, because I wasn't too sure what the cut-off date was, to be honest. So it's good to know that it's 75.
It's 75 years. And if it's a husband and wife buying a property, or some kind of legal partnership buying a property, then they take an average age of the two people, between the average age and 75. So if you've got a younger partner, you can leverage that as well.
You can leverage that. So just so if you're looking to come to Spain, maybe try and get a younger partner. Is that what you're saying?
From a purely mortgage perspective,
just
absolutely.
Purely from a business and a finance perspective.
Yes, it makes a lot of sense. And if they also have some nice income, then it's a bonus.
It's a bonus. It's a bonus. So just in terms of, you've spoke about quite a few things there. Are you seeing any sort of changes in terms of the countries and the people getting a mortgage? Are you seeing any sort of change in demographics or anything like that coming to you?
We're getting a lot of people from, like I mentioned before, we're coming in from the United States.
Yep.
They're very interested in the arbitrage that's available between the interest rates, the cheaper prices of property here compared to somewhere like Los Angeles.
Yeah.
And of course, the lifestyle that we enjoy on the Costa del Sol, and apart from this year, 300 days of sunshine a year, and the tapas culture and the general nice Spanish life.
So you're seeing that, mainly a big shift in...
A lot of people coming in from the States. The standard, we've always had interest from people from Northern Europe, the UK, Ireland, but this is not something new. It's people coming from further north looking for better weather, better quality of life.
Yeah, of course. And you mentioned people, I think you mentioned earlier on, people from the UAE coming in. Are you seeing some of that increasing?
We're seeing a lot of interest from there as well because Dubai is obviously a very attractive place to live for tax reasons, but
Yeah.
a lot of people living there have second homes in the south of Spain. I'm sure you've seen this.
I've seen it. I've seen it. This is why I was asking you, you know.
And it's certainly possible for them to get mortgages with Spanish banks as well. So particularly the banks that we work with, they're getting used to looking at the documents from places like Dubai. They understand now. It's taken us quite a long time to get through to them that you don't need to submit tax returns from Dubai just because they don't exist.
Yeah.
We've got our partners in the Spanish banks used to looking at these kind of documents as well. Like I said before, people coming from Dubai, they wouldn't be able to get a 70% loan to value on a property. So 60% is about the best that we could source for them.
Yeah, which is still it's still something, isn't it? It's still something to help.
And if you're well, you know a lot about being financially efficient with investments, I'm sure. So if you've got money in Dubai, invested in property in Dubai, you don't want to liquidate it and bring it into the Spanish banking system just to buy your villa here. So the bigger the mortgage, the better for a lot of people.
So Mike, you know, obviously we've spoke about getting the mortgage, getting in there early, but a lot of my clients are buying off-plan properties. Some of them aren't ready for a year, 2 years, 2.5 years. What's it, you know, they still want to buy it, but they maybe want to get a mortgage on that also. What's the process for that? Is it different?
Sure. The process is kind of similar to getting a mortgage for a used property.
Yep.
But the purchase process, I'm sure you're aware, is different. So
Yeah.
as far as I'm aware with this, the buyer puts down a deposit first of all.
Normally 30%. It's normally 30%.
Okay.
It's a kind of standard.
So 30% deposit, which is money that they'd have to find from their own funds.
Yes.
So it's very important in these processes that the money is traceable somehow, and it comes from the same background as the future mortgage payment.
Right. Okay.
If they're getting money from family members or businesses, like the notary at the end of the process is going to ask for the traceability of all of the funds that are transferred.
So even if it was in 2 years' time, they still want to have...
Because they want to see that the deposit has been paid and where the money's come from. So there's a lot of anti-money laundering rules in the European Union, and Spain is very hot on following everything to the letter. It's just something to keep in mind when you make deposits. You're not necessarily thinking about the mortgage application 2 years ahead of time, but to just keep the documents from all the deposits that you make, and you're generally good.
Yeah.
Then later on in the process, you normally have to put down a further deposit or another down payment, maybe another 20%.
It changes with developer. Sometimes 30% is enough.
Okay.
Sometimes, you know, over the course of it, you pay the 70% on completion. Some are like, they want 20, as you say, they maybe got another 20 further down. But the vast majority, it's like 30%, 70% is the majority.
Well, what we can do for buyers of new build properties is to perform a pre-analysis or preliminary analysis of the mortgage application.
Okay.
So we look at their finances now and we say to them, okay, you shouldn't have too much of a problem borrowing this amount in 2 years' time if nothing really changes in your financial situation. So they can go into the transaction with a certain amount of certainty that they're going to be able to get financing down the line. Then they put down the deposit, they wait until the construction's finished. When they go to the notary, or a couple of months before going to the notary to complete the purchase, is when we step in with the preliminary analysis, update all of the documentation and get the mortgage approved for them.
Okay.
So they're getting a mortgage pretty much for the rest of the money that they owe the developer.
So the banks would basically see that initial deposit as ultimately being the deposit was enough to satisfy them getting a mortgage for the 70%.
If it's a 30% deposit, then that's 30% of the purchase price.
Yeah.
And the bank's coming up with the other 70%.
70. So they're happy with that.
Generally speaking, yes. Again, it's a very individual analysis. So the bank has to look at the official valuation of the property, make sure that all of the numbers tie up with the financial situation of the people buying it.
Yeah.
But in general, yes.
And obviously the circumstances can change, in 2 years' time. And it might well be that, I don't know, they might lose their job or whatever, something might happen. Is there anything that can be done by that point, or have they got to just factor that in as their own risk?
Well, this is the risk that you take when you buy property off the drawings rather than a completed property. So you can often get very attractive conditions. So the property is at a big discount when it's still on the drawing board.
Yeah.
And even after the 2 years or year, however long it takes to complete the property, the developer is often selling the same apartments for 20% more, 30% more. You've got upside advantages there by going in early, but you've also got the downside risk of your circumstance, of not being able to make the payment at the end of it. That depends on your agreement with the developer.
The builder. So it's important to get some agreements in that what if scenario of maybe getting your deposit back.
Well, this is why it's good to have a good agent like yourself involved in the process as well, because you can make sure that the contracts are properly drawn up.
That's what we do.
Yeah, absolutely. Yeah.
We always make sure we get those little clauses.
If you've got some kind of a get-out clause that you can get some or all of your money back from the deposit, then it's pretty good. I understand that a lot of developers are quite keen on those kind of clauses, just because the value of the property that they're building goes up over time. So they can often sell it on for a little bit more
than what they have.
But this is more your expertise than my side.
Yeah, but just from a mortgage perspective, though, in terms of
the bank basically sits on its hands until
they just wait until you come
until the building is complete. They've got a tangible asset that they can give you a mortgage on.
Yeah,
and then they step in and give you the amount that you need. Again, depending on your individual circumstances, it can be all of the rest of the money or a percentage of the rest of it.
Got you. Okay, that makes sense. And just we've spoke quite a lot about the mortgages. We've covered different maybe ideas about the BareOwnership, which I thought was really fascinating. And there was the other option as well, potentially, that you mentioned.
Reverse mortgages.
Reverse mortgages.
Just if any of your listeners are interested in any of these options, BareOwnership is certainly the one to look at, because reverse mortgages are a very complicated application process.
I'm going to look into it more. It sounds really fascinating.
Sure.
As well. And no doubt the audience will be as well, because it's a brand new, I've never heard of it before. So I'm keen to learn more, and it's good for me to be able to talk to clients about that. Obviously, I wouldn't go into any detail because it's not my expertise. That's where I'd be looking for your assistance.
Sure.
But just to have that idea that is a thing that they can do. And just on this, obviously, you've mentioned it's quite complex. There's a lot of stuff to do as well. What are the sort of common pitfalls and maybe things that can delay getting a mortgage and delay things? What are you seeing?
Okay, well, when a potential client first gets in touch with us, we send them quite a comprehensive list of documents that banks always ask us for as part of a mortgage application process. This list has got 14 documents on it. It's not a short list. And the first reaction from clients, particularly clients from the UK, as kind of, this is an awful lot of information. It seems very invasive.
Yeah.
So the first step for us is trying to persuade the clients that this is actually necessary. These are all of the documents that the Spanish banks will ask for under Spanish law.
Yeah.
They've got to collect all of this information from potential mortgage clients.
Okay.
In order to grant the mortgage at the end of the process. So a pitfall for me personally is trying to convince our clients that this is actually necessary. As the process moves on, they'll see that it is actually it's everything that the bank is asking for. But it's quite overwhelming to people to look at this list and say, well, okay, we need to get this together.
Yeah, so it's more about educating them on just as necessary.
I don't want to generalise about nationalities and things, but in my experience, people from the UK are very cagey about handing over their financial information.
Yeah.
People from the States, not so much.
They've got to do their tax returns and all that.
So people from the States are very much like kind of, oh, you want all of this stuff? Okay, here it is, kind of within hours.
Yeah.
And in the people from the UK, it's more of a coercive process. You've got to sort of get it out of them, bit by bit. The first document that clients sign with us is general data protection regulations. So that guarantees that we can look after all of their data that it's not going to go missing or be passed on to third parties without their consent.
All right, so is that like EU GDPR or something, is it?
Yeah, it's GDPR.
Ah, okay, so you've got to do that, and then you've got to just
Yep.
educate them a little bit to feel comfortable with sending that information. But actually, it's important, or they won't get it.
Sure. It just boils down to how much do you earn, how much do you spend every month on existing obligations. So how much is your mortgage, how much is your car repayment, and how much have you got left over to pay for your mortgage in Spain? And then the banks take all of this paperwork, boil it down, and come up with a figure that they can lend you.
Right.
This is why it's important to get a pre-approval. So maybe you're looking at a €300,000 property, and the bank says, okay, we can only lend you 120,000 based on your financials. Then you need to kind of either come up with a bigger deposit or lower your expectations as to what kind of property you're after.
Yeah, which can be a difficult thing sometimes in its own right.
Well, absolutely. But Spain's a big place, and there's lots of different areas of the coast. There's something for everyone.
For everyone. Excellent.
I can be the most annoying person in the whole process because someone will send me a PDF version of a document, but inside the PDF is a photograph in JPEG format.
Yeah.
And like, okay, no, we can't, the bank won't accept this. They need the original PDF document, and it needs to be electronically signed as well. So,
but you go through that, because if they were going to go through the banks, it would be a lot. I would imagine that'd be stressful.
Sure. So what we this was the point that I was going to make before. We make sure that we've got all of the documentation ready to submit to our banks, our banking partners, before we go on to the next stage of the process.
Yeah.
So. It's our job to kind of make sure that all of the I's are dotted, the T's are crossed before going to the banks, because we've got our partners in the banks trust us a lot. So if we're introducing a client to them, it's because we're fairly convinced that the bank's going to be able to work with them.
Yeah.
And we're also we work 100% for our clients, but we're also a time-saving measure for our banking partners.
Yeah.
Because from January this year, Spanish banks dealt with 78,000 mortgage applications.
Wow.
So, it's a huge amount of paperwork. Yeah. And when you see kind of the biblical nature of the paperwork that Spanish banks have to look at for these applications, it's quite daunting. So if they've got someone who they know coming to them and saying, this is our client, as far as we can see, the paperwork is in order. It's worth looking at. It's worth putting at the top of your inbox, rather than it getting buried at the bottom along with hundreds of other applications. So this is one of the advantages of coming to a brokerage company. We've got preferential access to people at the decision-making level of banks. So we can go straight to them and get it, particularly if you're looking at a very fast purchase, we can push the paperwork through as fast as possible.
Yeah.
In Spain, as fast as possible is going to be at least 6 weeks. So if you want to buy your house tomorrow, we're not getting you a mortgage within 24 hours.
Yeah, yeah.
But if you were to go it alone, you'd be looking at several months, maybe.
Yeah, months and months.
If you get lucky and you walk into a branch and you talk to the right person in the branch who happens to have some time available to look at your application. There and then.
Yeah. Excellent. Well, listen, we've covered loads. And I've learned a lot, and hopefully the audience has too. Okay. And just thank you for coming along. And we'll speak again.
It's been an absolute pleasure, Chris. Thanks for having me on.
Welcome.